most of you will probably relate to this. You start watching ICT, you learn about the fair value gap, you know, the holy grail of ICT concepts, but then you see so many fair value gaps on the chart. Now you are entering every single one of them, you're losing money, you're getting stopped out, only like 20% of them are working, and you're thinking to yourself like, what am I doing wrong? You know, ICT told me to do this, to enter on fair value gap, and it's not working. And then you quit. So don't worry. In this video, I'm gonna show you exactly what to do, which fair value gap to enter, which ones to don't. So after this video, you won't enter a fair value gap that isn't correct again. So let's get started. First thing you have to understand is that fair value gap is just a small cog in a machine. No? You need more cogs. Small in a machine, small cog. Fair value gap alone won't give you anything. You know, you cannot trade with just that. But you have probably already learned that the hard way. So what do you need with fair value gaps? That's what I'm gonna show you. I'm gonna give you 5 rules that I'm standing by to enter the right one. So the first rule is, did the fair value gap cause market structure shift? What does this mean? Let me show you. Also, what is market structure shift? It's this right here. You get low, high, break of the high is market structure shift. It's this simple. So we have this low, this swing high. Now we want to wait for a break. So we got a break. After that, we've got fair value gap. Boom. I'm gonna change the color of that just so it looks better. Okay. Yeah, fair value gap. And this one is the one you should enter on. So put your long here. Get your 5 handles. Also targeting some liquidity. So 5 handles. And let's see. It went without us. So is this a bad fair value gap? No. The price just wanted to move faster. That doesn't mean that this fair value gap wouldn't be a good one. So let's wait. Is it gonna enter this one again? Probably not. It looks like we are getting new swing low. So new swing low, swing high. Now we want to wait for the break again. So we got a break. Wait for fair value gap. We've got one. We also have order block right here. So your long should be like on top of the order block or consequent encouragement of the fair value gap, targeting the liquidity, which is right here. Also, we have strong fair value gap, and this could be like, I wouldn't call it a rule, but when you see a fair value gap that gets entered more times, it usually means that it's a very strong one, and you would want to see the price to just rocket straight through. So this is our point of interest where we think the price will go. Your limit order would be right here. So we got filled. Now also target priced for handles, easy as that. And yep, as you can see, it's this simple. So there is like more fair value gaps, right? Which one should you enter again on or shouldn't? Some might think that this one should be also enterable, right? Or you probably entered on this one already. Well, did we break liquidity? as you can see here and here, we did. Also, we are in point of interest of another fair value gap. So this one is like, you don't even think about that one. You know, it's just after a break of liquidity, this side of fair value gaps is basically dead. Don't look at it. Now, on the other hand, we can see another shift. We have swing high, low, also another one here, but this one is also low, swing low. This candle broke through. Now we got fair value gap here. We've got also this one, but you want to enter on this one short. So put your short here, stop above, targeting low. We've got filled to the tick of this fair value gap. Now dropping. And you see, simple as that. Now, another rule. I'm gonna move the rules here. Rule number 3 was the fair value gap disrespected. Disrespected. Okay. Okay, so we see this huge candle right here. Why? Like, you see, we get this fair value gap for sure. This is not a fair value gap I would like to enter on. Or actually, we have low, swing high. Okay, this one is also good, but I would enter probably on the lowest point. But I don't like this one as much. Now again, we have these fair value gaps. Some of you might think that you should enter on these ones. Nope. We broke liquidity. There is, you know, there should be a shift. And we also got a shift of the market structure. So it's highly likely that we are going up. So let's wait. You could have entered on the low. We also got these fair value gaps, but I would not be going short because liquidity taken already. Now, swing low, swing high, huge candle. We did not break this, but as you can see, disrespected these fair value gaps. And why is that a good thing? Because now you want to see the another one, the other candle after this one, to respect them. So you see, it closed above both. Now you also have this fair value gap right here, but this is not a good one. This fair value gap basically like did nothing. You know, it did not take any liquidity, didn't break, didn't make a market structure shift, nothing. So my interest would be here, entering on this fair value gap, targeting liquidity here or here. Stop below this. So you can see that we got the entry, one tick below. And now we got target hit. Simple as that. Now, another rule, rule number 4, is the fair value gap below 50% of FIP. For this, I like to go, I like to go to the higher time frames, like the 5-minute one. And my bias currently is after breaking this liquidity here, that we might be going even higher. But before that, I would like to see a retracement to enter a trade. If that doesn't happen, I'm fine with that. But, you know, for entering another trade, I would like to see that. So we have this move right here. Okay. I'm expecting the move to happen, like to hit maybe this fair value gap right here. So you should take your FIB from the low, to the high, like this, and you have the 50%, and you want to see the fair value gap to be below. And as you can see, the price hit the fair value gap to the tick. Also, we have other things that are playing in our favor to the long side, like this order block and breaker. So below 50%, and that's basically it. Now the last one is just simple higher time frame to lower time frame, and you should stick to that rule in almost everything. Higher time frame has always more, I don't know, let's say it has the biggest say in the move and direction of the market. So the rules. Did the fair value gap cause market structure shift? If it did, it's a better one than just the usual one, you know, like let's say this fair value gap right here. This one did nothing basically. You should never consider this one. Did we break liquidity? Was the fair value gap disrespected? Is the fair value gap below 50% of FIB? And higher time frame to lower time frame. These simple rules will help you find the right one, and you won't enter wrong fair value gap again. If you like the video, like, subscribe. See you in the next one.